Okay, in this tutorial, I'll be teaching you about INTC stock. I'll just copy that and I'll paste it in Google and click stock beside it. And I can see Intel Corporation is the name, and you can see the information on the left hand side, which is from Google, and on the right hand side, it's from Wikipedia. And you can see if you want to buy the stock right now, it's for 48.08 US dollars per stock. And if you want to like see when it was founded, you can see it founded 1968. And if it's not written outside, you just go to Wikipedia and you go to the box, and then I'll just zoom in for you. You see founded 1968, 50 years ago. And if I just want to show you about the a website called Macro Trends, and it's very important for ratios. I'll just paste in the stock and make sure that the name is same, and I'll click price ratios and I'll click price book ratio, and I'll explain you briefly for people who are new what price book ratio is. So okay, so price book ratio, book value means that the real worth of the stock price means the market price. If the book value is $1 and stock price is $2, that means that somebody who's buying this stock right now, they'll be paying $2 to buy a stock that is only worth $1. So they're paying more money to buy the stock that values less. So it's expensive. So price book ratio, if it's less than 1, that means that you're buying the stock at discount and it is undervalued, and that's ideal time to buy. If it's 1, that means that you're not buying the stock expensive or cheap, you're buying the exact price. And if it's more than 1, that means that you're buying an expensive stock. And the higher the number goes, the more expensive it gets. Right now it's 2.92, which means that if somebody buys the stock right now in July 2019, they will be paying 2.92, or nearly 3 times more money to buy the stock. So it's nearly 3 times more expensive. And the lowest it was in, I guess, in 2008, when it was 1.49 times, or 1.5, nearly 1.5 times more expensive. Still, it's expensive. It was expensive in 2008, but now it's nearly 3 times more expensive. So you need to be careful about that. So let's look at other ratios. And current ratio means that if assets are more than liabilities. So if the ratio is less than 1, that means that it's dangerous, it's risky, it's not secure, because liabilities are more than assets. If it's 1, that means assets equal liabilities, which is brilliant. But we are looking at a stock that is not risky, that has a good margin of safety, and so we are looking at the ratio of 1.5 or more than that. So let's see if we get that ratio. Okay, so we are looking at ratio 1.5 or more than that. Right now we have data up till March, and we have 1.54 ratio, which is above 1.5. Let's look at previous ones as well. and we can see that it's always been above 1.5, which is brilliant. It has always have a good margin of safety. It has been secure. Let's look at debt equity ratio. Debt equity ratio means that if the company is mainly operating on debt or equity, we are looking at zero point 0.5 or less than that. Right now it's 0.35, which is very good because it's less than 0.5. Let's look at the previous trend as well, and it's always been less than 0.5, which is brilliant. And so it has a very good margin of safety. Let's look at return on equity. We are looking at 8% or more than that. And let's see. So we have 28%, which is a lot more than 8%, which is brilliant. Let's look at the previous trend as well. And okay, so in 2009 September, just twice in June and September, from June to September, it has been below 8%, but still it has been a positive return. So once off or twice off, if that happens for 2-3 months, that's fine because it's still positive return, but it's a little bit below 8%. So that's fine. I can ignore that because that's just twice, and the rest it's always above 8%. Let's look at if this firm pays any dividends. So I'll just type that in Google and I can see in dividend yield 2.62%, which means that it pays dividends. Companies that pay dividends, it means that they are financially, it reflects that they are financially doing very good because after paying all their costs and everything and paying the creditors, they still have extra money left that they pay as dividend to shareholders. Dividend means extra money. So extra money in the firm is dividend. So this firm is able to pay dividends, which means that they're financially very strong. They're generating quite a lot of money, and the market cap is 215 billion, so which is a very big size company, so which is brilliant. And let's see if it has any patents. So I'll just go to Justia Patents. I've left the link in the description and I will just search this. And what I'm more interested in is I'll just type in the full name because sometimes it doesn't appear. So I'll just type in Intel Corporation. So I'll just type that in, search. And what I'm interested in is applicant or assignee. I'm not interested in an inventor because inventor means that they have invented but they don't have the full rights. So I want the person who has the full rights, which is applicant or assignee. So they have patents in 2012, 2008, 1, 3, 5, 6, 5, 7, 5, 8, and so on, and which is brilliant because patents act as a moat and it gives competitive edge, and it means that the firm is continuously innovating, which is brilliant, so that they can thrive for long term. And make sure that you notice if they have any patents in 15, 16, 17, 18, or 19, which means they are recent patents, because sometimes the firms start innovating but when they are formed, but then they leave innovating. So in 2018 they do have a patent, which is a recent patent, so you need to make sure that they have recent patents as well, so which is brilliant, which gives a very good sign. And now I'll go to Yahoo Finance and I will see what the key executives, who the key executives are and what are their salaries, if that's fully shown. And I can see Intel is INTC, yes. So you need to match the symbol with the firm. Go to profile, and sector is technology, industry is semiconductors, full-time employees, and I can see all the key executives, but I can only see 4 salaries shown, not the last one. So it could be that Yahoo Finance haven't covered it, but you can find it in another website. So you need to see about this person, and the rest the salaries are shown, which the more the information is shown, the more transparency and the more trust you can build. And lastly, I want to see what the people working here think about it. So I use Indeed for that, and we have 4,300 reviews, which is quite a lot of reviews to judge a firm, and it's 4.1 star, which is brilliant. It means that the employees are having good time working here, which reflects the reviews. And I'll also have a look in Glassdoor. We have 13,000 reviews, which is a lot of reviews, and it gives 3.9 or nearly 4 stars from 13,000, so which is brilliant. You can read through the pros and cons as well. And let's see if I have anything else to cover.